Hi, good morning, everybody. Thank you for taking out time. I really appreciate all of you coming together. Thank you, Simon. Thank you, Mario. Thank you, Bhavin. Thank you, Suresh, as well. We've had a quick introduction, but I wanted to quickly do that again. Suresh today leads the entire Golden Hill Capital, also ex-TVS fund, as well as Deutsche Bank. Specifically on growth and building value across various organizations, various segments. Bhavin, who currently leads Samiksha Capital, focuses specifically on high impact results of the market. Also, earlier led global tech for JP Morgan and Credit Suisse in the past. Mario leads Future Labs after spending time at Messi, helping them build their ventures. Future Lab today focuses on incubating businesses and taking them to post commercialization and success. Simon leads ENRG, which focuses on M&A growth and helps organizations succeed, making sure that they have both integration, people, and value as a key part of it. Purpose is the central core of this conversation, and I would love to have to start with what has been the key magic mantra for each one of your successes, and what has been something that you have taken out of saying that this is hygiene for your individual perspective of what works and how we can learn from leaders like you who are traditionally value propositing successful smart investments. Simon, love to have you start, keeping in mind that you have had cultural cross-border relationships with various perspectives across markets, and what has been your takeaway into an M&A perspective, keeping in mind that there is clear build story around it.
Thank you, Pranav. I'm happy to be on this call today. You know I'm going to come at this from a people perspective. That's really what my current business energy is around. I've spent the last 20 years in the recruitment and staffing businesses, sold my own company to Recruit Holdings, and for 10 years was very much involved in helping them through M&A integrations, post-merge integrations across Asia, from Japan into China, Southeast Asia, and India. We got some things right, and we got some things wrong. I think people, it's especially difficult these days. I think with COVID to get out and meet people in person, there are technical challenges to make that happen. But we were fortunate to be able to cross borders, sit down in front of some fine people, and really understand what makes them tick. I think alongside that, it's very important to be doing business intelligence. Sometimes when cultures come together, the Japanese meet the Indians, the Japanese meet the Chinese. There's a lot of cultural stuff around music and around entertainment and around food and language, and this is what we do, and a lot of laughter and softer stuff around that, which is great. But you have to realize when you're doing cross-cultural your M&A that really coming from the Japanese side, we don't really understand how Indians work and operate at a very deep level. We don't really understand the values of that business, the values of the founders. I think it's very, very important to get down in the weeds and do your business intelligence around the outside of that to try to understand, what is that company like? What is that founder like? What does good look like? And make sure all these things are really put in place before you sign on the dotted line. Because you can't really untangle it in post-merger integration unless you've set everything up front. So move beyond the fuzzy stuff and really try to understand the people and the drivers and the value drivers behind an M&A before you get into it.
Lovely. Mario, I'm going to pick up that right after Simon's piece. And what has been your focus specifically in identifying Future Labs and your participant partners on driving excellence around post-raise, post-identification of diligences? What has been your area of what you felt has become nuanced but yet pretty critical?
No, absolutely. First, Pranav, pleasure to be here today. The topic is very relevant one. I believe you're like in today's world. So let me start from a macro perspective. We focus mostly on technology venture investing, so early stage and high potential scalability. And if we look at this from a macro perspective, for sure, there is no doubt that we live in an unprecedented era of technology-enabled innovation. And what we would add is that while the past decade has been very exciting, from an investment perspective, we actually see even more opportunities, coming up, in the next decade, because innovation is being built on top of innovation. With that, however, as you pointed out, the investment is becoming a lot more complex, and therefore, back to investing smarter and win bigger is going to be more and more difficult, to generate the type of returns than before. And what at least we have tried to focus on is invest. We know that capital is abundant nowadays. And so investing in the right operational capabilities to really support the early stage companies scale is one of the way that we try to add significant value, right? So the point is not just deploying capital in the right sectors, but actually really helping them grow through the different stages of scaling up. And of course, it boils down to people, as Simon was highlighting. The way that we try to add value is mostly, first and foremost, generating revenue, so leveraging on our corporate network, which is a strength coming back from our McKinsey experience, generating clients, but then of course looking to expand the founding team beyond the initial founders. And so selecting rapidly the right expansion plans around people becomes core to the type of proposition that we try to bring to the table.
Lovely. Suresh, I'm bringing you in right after this with a focus of the premise of your journey between Deutsche, clearly a legacy multinational, clear purpose, clear objectives, clear defined KRAs, and then at creating the family office. And family office as a core of itself has a sense of entrepreneurship, right? Because you have aligned your areas of capital in different parts, and you kind of are very clear that your objective to making an impact, keeping purpose as a central core of activity. What has been the top 2 or 3 key areas that you thought came out of your experience at working at a family office, defining what can be done for the new age ecosystems and how you see it today?
Sure. Thank you, Pranav. First of all, pleasure to be here and participating in this panel. The key thing, Pranav, I would say is moving from Deutsche Bank's investment banking experience, working on Wall Street, dealing with technology companies and kind of handling their M&A to fundraising activities, and moving to India and working with the TVS Group. The key differential that I found was there was a lot of inherent demand in family offices within India to be participating in both the private and the public markets. And the key decision that was taken was, especially with TVS Shriram Growth Fund, is TVS Group putting in a bunch of money and then Shriram Group adding to that, and then saying, why do we not raise money from other family offices and go through the network of relationships that they already have as industrial houses, large conglomerates in India, and not really raising money from an institutional perspective. Because the institutional market for investing in venture capital and private equity was still very early. I'm talking about a decade ago now. And at that point of time, it seemed like it makes logical sense to give that access to family offices to participate in the venture and private equity investments through a pooled vehicle, SEBI-registered vehicle, and all of the capital was actually raised from HNIs, ultra HNIs, and small to large family offices. And that, I think, was a very first of a kind at that point of time. And even today, the TVS Group has raised about 2,000 crores plus of capital, most of it based on family offices. Very little from institutional capital that is still evolving. The fund of funds structure is still evolving in India. So when you look at that and when I compare that to what I had seen in US when I was there, which was primarily an institutional capital raising market. So that, I think, Pranav, has actually established itself well in India now. Now that this is placed, now there is a lot of capital which is coming because of regulatory changes driven by the central government as well to set up fund of funds, having LIC, NABARD, and other interesting large institutions, SIDBI, etc., investing into these funds. That market has slowly opened up. I think we are still at a very early stage. A lot of significant opportunity on raising capital and establishing that layer of pension fund equivalent or fund of fund equivalent that is missing in India today. I think
Suresh, I'll come back to you on.
Yeah.
I'll come back to you on the way funds are structured today. Bhaven, I'm going to pick your brain on building a potential value with a clear analytics perspective and how the organizations today who are growing, and specifically with the family offices, not only in India, but around the world, who are clearly conjuncting into making sure that the purpose of the business is not away from just a return that organizations seem to only binarily visit. How is and what is Sameeksha doing today to value building organizations, and how has there been a trend of what you have seen?
Well, I think, from our perspective, it is going back to the basics, whether it's, in whatever place that we want to invest, we apply the basic principles of investing. And, but what we have done though is we have taken the concept of value investing and put it into the context of what is realistic today. So what I mean by that is, and if I think of it in the context of India as a market, because that's where we are doing a bulk of our investing today, although we also plan to basically scale up our global product. So in context of India, we have tried to create some sort of a macro model for India where, we say, what can India look like, not just in 5 years, but in say 20, 25 years. And within that, we have tried to map each and every industry and kind of size up the potential for every possible industry. And the great thing about that is that because many other countries have developed ahead of India, we have many kind of comparable models to work with. So we try to use that and then come up with sort of our own industry model, if I say so. And that really finally boils down to how we value each and every opportunity.
Lovely. Simon, I want to pick your mind on the construct of value investing. And while Bhaven brings an analytical ecosystem, I still see value in the construct of purpose. And that's how the family offices today are created, where they have a large conjunction of their money, which moves primarily, if looked only at a return standpoint, to the big fours or the Merrills of the world or other large organizations of the world. But the owner of the family office primary partner or the funder is still looking to not let go of the entrepreneurship element or the purpose. What has been your experience of preserving this purpose, and how has that led to times when that purpose got diluted or something which did not have? And how have you really looked at 2 or 3 variables which help organizations succeed?
It's a great question, Pranav. My current business, Energy, it's all cross-border, nearly all cross-border. So in the US, in Asia, Europe, whether it's buy side or sell side, I'm working with both sides. And very specifically, very niche, it's in staffing, it's in recruiting. So I just wanted to be clear on that. So again, when you're buying a business and there's a founder in it, I think it's really, really important to understand what he wants out of this. Some of them are really just happy to take the money and run after a couple of years, and they're quite clear on that. They have a successor in place, and they've done their time, and the buyer's aware of that and so forth. Other cases are a little bit more complicated. They want to stay, but perhaps the buyer thinks, I'm not sure I want to keep this guy beyond the earn-out period. So there's some politics and diplomacy that can play into that. But I think you really, like, if you're in the middle like I am, you kind of, whether you represent the buy side or the sell side, like, it's really, really important to understand what the buyer wants and really what the founder wants of a business and where they want the direction. And then, your job really is to help guide towards that conclusion or make recommendations around that. And I think, to be honest, some of the businesses that I've been involved with in the past, we have over-relied on the founder to continue to create value for us. We've over-relied on the founder to continue to move with the times and to get with technology, to get with modern trends. What worked yesterday doesn't work today, and so forth. And when you're managing these relationships from another country, it's quite difficult, right, to really push the needle. So that's why, again, it goes back to the point I made in response to your first question. It's so important to set all of these things up front. What does good look like from the founder's point of view, the buyer's point of view? Really set it out and ask all of those elephant in the room questions and get them out there. And then you have a kind of a clear, charter, if you like, to work with. So we're learning and evolving as we go through that.
Yeah, Mario, I'm going to pick that up further, what Simon just said. I think the purpose and the value of the entrepreneur who you invest into specifically for Future Labs and grow the organizations. When do you feel that exit not necessarily only financially, but exit from a potential scale-up standpoint? Because maybe a founder is just meant to be $100 million guy, and your vision of that company is $1 billion, and he just can't perceptively build that value. So how do you invest smartly while telling that individual that your journey within the organization is only till this phase? And have you gone through that times also?
Yeah, no, Pranav, great question. I think, look, first, let me say that purpose is actually a very central concept that we focus on because of many reasons. First, we are entrepreneurs and investors, and we want to build sustainable businesses, right? So we think very much that if we build great businesses, then automatically there is an opportunity to do well by doing good, right? And that's so sense of purpose, in addition or even beyond the financial return, is paramount to at least the sector we focus on. And then the other reason is what you said, which is because we tend to focus on tech ventures early stage. We tend to actually work a lot with the millennia, the next generation. And for them, actually having something that is beyond just the financial outcome is very important in being inspired and have the motivation to drive their objectives forward. Now, being back to another nuance that you touched upon, of course, we also realized that some of the founding team that brought the company from 0 to 100 may not be the ones that bring to from 100 to $1 billion. But ultimately, many of our founders that we work with, especially because that's part of also our role to coach them, realized that, look, you're being a part of a bigger opportunity, and perhaps you're moving them, you're like to more, non-executive, you're like board members, you're like, and or other roles, and let you like the company be managed then by more perhaps experience, like, or professional management, it's part of the game, right? So I think like seldom we have real pushbacks, from those type of like teams that we work with, because ultimately back to the purpose, we want to create your larger, bigger impact and not incremental impact.
In fact, I sink in on that concept so well, because I have consistently, within my experience over years, built teams at leadership levels. And when you do that for other organizations, the construct of working for $1 billion enterprise and working for $100 million enterprise while finding the top guy is just so different. The journey, the expectation, the purpose needs to be very clear, and often it is not. And I'm going to ask this question to Suresh. Suresh, I have supported a lot of family offices, helped them transition, build organizations. We do it for some royal large family offices where they are looking at state-led commercialization. My question to you is that when you're in a family offices, how responsible are you to make your investment succeed versus when you are just funding the secondary or the minuscule investment within 5 different investors that go through? What has been your feeling about partnership?
Yeah. So, Pranav, my experience, one is around the TVS group on that, and the second is some of the funds that we work with now. A few of them are family office funded primarily, so their initial capital has come from family offices. In both of those situations, definitely I sense a little bit more shift from conservativeness to being more aggressiveness. Right, that shift I have seen over the last 5 to 7 years. What I mean is, initially,
can you tell me what aggressiveness means? I mean, if you can highlight what you mean.
Yeah, I'll highlight that. So when initially we started, they were kind of thinking about, we want to have low correlation to the market. We want our investments to make money on a pure alpha basis. What can you do? What is the differentiation that you have? Why is this uncorrelated to the market? Give me an asset class that works that way, right? That's how they started out. As time evolved over the last 2-3 years, I've seen some of these funds shift into even crossover funds, Pranav. Basically, what that means is they are kind of looking at pre-IPO, 1 round before or even 2 rounds before, carrying that investment post-IPO and holding it on much longer. Right, the transition from going and saying
it's not only about the exit. It's not only about the exit.
So, as the markets have expanded, as the liquidity has improved, they definitely are more interested in the entire spectrum. And one of the funds that we are working with today is saying, I want to raise a crossover fund now because I want to see opportunities, even, a little bit of a higher risk asset quality like biotech. People are more amenable to it now, right? When you put that in a portfolio and if you're able to manage that. So that's what I have seen, Pranav. In the interest of time, I'll be short there, but going from uncorrelated, low differentiated risk asset base to saying, I want to do a crossover fund with both pre-IPO, to IPO and post-IPO, that shift is something that I'm seeing quite a bit, especially with some of our US clients.
So Suresh and Mario and Simon, I'll bring all 3 of you in this perspective. The objective of people and valuing people, what are the top 2 things that you look at an entrepreneur when you say that this person can build an organization for the future? And I'm just curious to understand from both these aspects, when you work with a portfolio of companies, does the industry resonate with the choice of the founder, or does the investor needs to resonate with the choice of the founder? Simon.
I'll go first. I can think of more than two, but definitely charisma is really important for me. I think as a founder, there's so many different stakeholders that you need to deal with. You need to attract staff, right, first and foremost, and keep staff and keep them with the vision and keep them through the long nights and the long hours and all the rest of it. You need to be able to, smooth things over with external investors, manage these stakeholders, work with partners and so on. Charisma is really, really important. And I think related to that is passion. So it's almost one, right? If you're passionate, it comes across in your charisma. I think the other really is just kind of, just hunger, really, just drive and hunger. That nothing is going to stop you being successful. It's just akidamenai, we say in Japanese, but just this relentless drive to keep going and make things happen. I think those two things will be important to me.
I was going to say, look, Simon hit the nail on the head. Perhaps in addition to what you mentioned around hunger, to us, it's really like that sense of objectivity around being curious about what is the problem they're solving, and be humble enough, that, while it's important to have hypotheses and have a passion, you also know nothing, and therefore you're learning from the market. So we find that, if you have charisma, inspire the team, and have that humility and hunger that allows you to drive new things forward, but actually also absorb from the market, you can really be successful. The last part that I would say, we also focus on speed of decision making. There are a lot of really good candidates that, however, want to have almost the perfect answer, and especially in early stage, startups, you will never get there, and therefore the ability to take a decision and then iterate it, is very important, because and that means also dissecting what is the decision we're taking today and not overcomplicate, right? And so those are the type of things that we focus on.
Lovely. Bhavin, what has been your choice of identifying an organization to invest into, specifically when the success of the founder has not been very successful in the past? Is something that you build a periphery around?
So I think one has to look at the circumstances, that led to, the outcome, and see if those circumstances are for any reason, changed. We have seen that, there are businesses that didn't do well for many years just because the environment was not right for them. And so, but, the business model was actually quite good. And I can think of a very interesting example. There's a company called TD Power that make AC generators, and they are one of the few, in fact, they're sort of a market leader in a relatively small niche, if I may say so. And they're being used very, they're a strong player for anyone who's trying to set up captive power. Now that whole space has gone through a big sort of a slowdown for many years, and as a result, the company didn't do well. But the time has just now come for them to start seeing much stronger growth, and I think market is beginning to recognize. So sometimes it is important to separate, whether it was a failure of the founder or the entrepreneur or the environment. And once we do that well, I think we can sometimes find very interesting opportunities.
Lovely. Suresh, any thoughts from you on identification of leaders, partners, specifically in multicultural environments? I'm sure Deutsche Bank and with different cultures.
Yeah. So, Pranav, I would say in terms of investing in early stage or when we do angel investing, at least from my personal side, I generally look for, as Simon has said, a little bit more of a fit with the passion that he has, right? That entrepreneur, he or she, how does that business model or that market fit into the passion that he brings to the table? That's very important. And if it's a good fit, then a lot of energy will come in. It's a, it feeds back into his pool of passion that he has, and that's a very good fit. And secondly, somebody who doesn't take a no for an answer and he just wants to keep pushing the envelope. That's a good skill to look for. From Deutsche Bank's perspective, in terms of cultural things, I think it's a little bit more of a cliche, but I would say that we are looking for people who are adaptable, who are able to kind of adjust and be a little bit more of a good listener to adjust and quick decision making, right? So I think those things are maybe a little bit more softer aspects, but at Deutsche Bank, definitely, Pranav, we were dealing with much larger companies in terms of their IPOs and post-IPO M&A and so on. So at that point of time, it was a little bit more about, what numbers have been delivered, as Bhavin said, what are the circumstances, what is the market potential, and so on, right? So that whole evaluation was a bit more broader than just the individual. When it comes to early stage, definitely the individual makes a much bigger piece of the decision.
Pranav, can I just
Lovely.
Pranav, can I have one or two quick points to that? Is that okay?
Please.
Yeah, I just wanted to make the point that when you're evaluating a founder, and I'm doing some work in HR technology, so very early stage HR technology startups. What you're seeing is what you're hearing from this person, right? So it's a very kind of like binary view of how this person is. Unless you're really able to do your due diligence and talk to his people and his customers and really make that happen, then you can be fooled, right? What you see is not always what you get. And I think particularly during COVID, during the pandemic, all of us on this panel have additional challenges because we're not able to travel in the same way. We're not able to evaluate in the same way. Deal rooms are being set up virtually, and we know there's a lot of money splashing around, but we can't always get things done in the way that we did pre-pandemic. So really, really important that we're doing our due diligence and making sure that the evaluations that everyone's just talked about, what we'd like to see in a founder, are really, really the reality, because we don't have that gut in-person feeling that we would have had before if we can't travel and meet in the same way.
I'm on I think all of us have spoken aspect of just investment, and I think that is consistent to the way all of you guys have built experiences around. One last word that comes to your mind, each one of you, when you think about your last smart investment, what was that? Simon, one word.
Wow. Founder. There's one
Mario.
Wow.
For me, it's really orchestrating an unfair advantage. And let me elaborate a little bit about that.
More than one word.
Especially in venture investing.
That's more than one
we're
word.
Seeing that. One word, I agree. But unfair advantage, let's put it this way. In venture investing, we see that there is a proliferation of early stage startups, right? Many of them have great founding teams, they have a great market opportunity, good capital behind. And equally, because of that huge availability of capital, we see market valuations skyrocket already. So it becomes more and more increasingly difficult, in our view, for traditional VC firms to actually generate extra returns, right? In this environment. And so what we try to do is very much understand how can we really generate that operating value add through our teams, but actually also through the corporate network that we have, because they give us access to the corporate clients, to actually the corporates, clients themselves, to generate that almost de-risk your path to scale. And I think that's a very important element that will be increasingly important as many of the ventures, unfortunately, because of the proliferation of startups, will not be able to scale in the future, and is becoming increasingly costly because of high market valuation to make mistakes in the investment side.
No, in fact, Mario, just to add to that, and I'm going to speak a couple of words as well. But I think the premise of the reasons why we get these royal families offices is commercialization. And I use this word state-led commercialization. I think one of the key realizations was that, I am going to give $100 million ticket to, they also realize that $100 million rent to acquire companies for that company to deliver on that contract. Now, the premise is that can we help that 4 companies without having a mediator in place, which was classically the brand? That consistently drives the approach of commercialization, advocacy, because there are markets where countries and companies find it difficult, but the need still exists. So I think that becomes a central core of the play, and I totally resonate on what you're saying, Mario. Suresh, in one word, and I diluted the one word process, but anyways, what's been that one word for you?
For me, I guess the key point, at least for the last 2 years, Pranav, has been staying with the market and not selling too early.
Okay, perfect. Going beyond comes back.
Yeah.
Yeah, I'm not sure if Pranav, you were asking me.
Yes, please.
Yeah, so I'll use 2 words instead of one. One for making a smart investment, and second was to get out of a smart investment. So the key word is tailwind. If there is tailwind, nothing like it. And for exiting, technology disruption.
Lovely. Thank you so much for having you guys in, and really appreciate you taking out time. Thank you, all of you. I know all of you from different parts of the world, and I really, really appreciate you taking out time and doing this for me. Thank you so much.
Thank you.
Thank you.
You're
Thank you.
welcome. Thank you.
Thank you for having us. Thank you.